Well, good morning, traders. I wanted to talk to you about a trade I put on today. The trade was in SPY, and I put on what's called a leap. Bought a leap option, or in this case, I made a calendar trade, a long-term calendar trade. And what I did here, SPY was about 423 or something like that this morning, and I put this on. And right here, as I pulled up the profile of the trade I put on, I sold the March 18 425 call expiring this Friday. And I purchased the monthly expiration of March in 2023. In other words, it went out a year, okay, and bought the 425 call. It cost me $35.73, which is $3,573. And I guess you could say, well, why in the world would you go out that far and spend that kind of money? Well, here's the thing. As you can see, this trade has $85 a day in theta decay. Now, granted, it's going to expire this Friday. Um, so, it's the short option I sold. It was for over $4. So, in order to get $4 worth of premium out of it in this week, you have to have a high theta decay. And just so happens the SPY closed right at pretty well 425, pretty doggone close. Um, so it basically I could have closed the trade out and made $33 today, but I didn't. I held on to it. And a couple of reasons I'm doing this. Obviously, as you can see by the profit tent, the teal, turquoise, whatever color you want to call that, if it stays right here to Friday, this trade's going to make about $483. Well, I don't really expect it to stay here and not move to Friday. The Fed's going to make an announcement tomorrow on interest rates, and who knows? The market could have already cooked it in today. It could go up more, down more. The war over in Ukraine, everything's okay. Anyway, but a couple of things. If this thing tomorrow would decay another $80 on top of the 113, if I get up to where I can make say 150, I might close it out and look to do the same thing again. Okay. Another thing you can do if you trade this in SPY or IWM, I have another one on in IWM, a leap. Um, um, the options expire 3 times a week, so you have 3 times a week to adjust on those and reduce your costs by taking in more premium. Now I remember IWM. Let's just go over here and look at IWM and see what it's currently trading for. Today it closed at 195, and when I put the trade on, um, IWM was trading. This is a daily chart. It was trading like 205. So I sold the 205 call and bought the 210 going out a year. I was thinking it was going to continue to go up before all this craziness started happening. But anyway, with a long term, since it obviously has gone down, I was able to continue to roll my short calls 3 times a week. And as this market walked its way down, I walked my way down. I think currently I've got like the 197 call that's coming off tomorrow. And I've been able to reduce my cost. I want to say I started out at IWM, trade cost me $2,100. And in about a month, I've rolled it down. I've only got $1,600 in it now. I've collected about, pushing $500 of premiums I've collected. So that's one reason to go out with these long term. This gives you a long time to be right. Of course, you could, as we went back and seen the analyze here on the SPY, you can be right in a short amount of time if things hit where you looking for, but you can also take a long time to be right. So that's the reason I traded those, and maybe look into doing the same. Good luck to you out there.